But what's been the management takeaways from MOIL? Because they have been meeting a whole host of analysts. What's the latest update coming in? What's the guidance they are sharing with the street? Let's go across to my colleague to find out more on that.
Well, yes, in focus we are having MOIL and they had an analyst meet, and the important takeaways include the volume growth is expected to come in between 20% growth over the next 2 years. Apart from this, also management commentary was especially bullish when it comes to the costing part, as they have mentioned that the cost of production that is expected to normalize to almost 6,500 rupees per ton from the current numbers of 6,900 rupees. Apart from this, also over the next 10 years itself, the next wage revision will kick in, and that is why it offers stable costs for the company. Apart from this, also there is expected that there would be incremental production coming in at least 3 sites across the country. Now, considering a huge export dependence, they are actually very bullish when it comes to the export prospects, and they are actually currently looking for a JV with GMDC for expansion. Now, the most important thing is, of course, the company is not facing any difficulties when it comes to mining lease renewals, and they are well placed that most of the leases are actually extending between 2040 to 2050, and there wouldn't be any additional royalty. Apart from the dividend policy is something which would be in the focus for the company, and they have allocated roughly 30% of the profit for the dividend allocation, while the rest will be actually involved in the growth projects. Now, looking at the stock itself, the stock is up almost 15% from March lows itself, and a recent broking note came from Antique Broking, where they have maintained the price and keeping the target price set at almost 206 rupees per share.
Okay, we'll leave it at that, Sharad.